Today I want to discuss SCHD, which is an offering from Charles Schwab, and it focuses on dividends. I know typically on my channel, when I'm covering these ETFs, I'll typically be bashing them, and it's for good reason, because most of the time they're these high-yield, goofy strategy ETFs. Well, for this one, I'm not going to be as critical, because they're pretty straight up with how they advertise this. They offer a low expense ratio, they're giving you a little basket of dividend stocks at a fairly reasonable price, respective to what you're going to be receiving. So no true complaints there. Where my issue is it's fine to have them do this for you. I feel you'd be better suited as if you're trying to be an investor to learn how to kind of do these yourself. So what I'm going to do is pull up all the tickers, and then I'll just put them into my Thinkorswim and just kind of go through all the pictures of them to see, like, hey, is this something that just visually looks like you want in your account right now? As far as like risk tolerance or risk percentage goes, on this chart, you'd probably, if you're considering this or if you're in this, then you're probably sitting at around a 3. And that's where this is most definitely a muscle that you have to build up over time. Because as a trader, you can see I'm the little star over here, and I'm not suggesting in any way that you should try to be as risk tolerant as where I'm at on the chart, but I am suggesting that maybe you can be a little more tolerant to risk and move up to like that 2 or that 1 type of range. Once again, let me reiterate, definitely don't take more risk than you're able to handle, because otherwise you'll just be ending up with PTSD from trying to do this on your own, so little bits at a time. Alright, so I've already gone ahead and copied all the ticker symbols for SCHD. So we're going to make that same watch list of what it's got. Create watch list. We can call it like SCHD plus. And then we're just going to be going through and pruning out what we don't like that's in here, and then keeping everything that we like. Along with that, just to clean it up, I'll get rid of all these other columns of what the price was. Along with, actually we'll keep volume and we'll keep the sector, because we want to make sure we continue to be diversified in what we're targeting. And then also volume, I don't like anything that's like under 250,000 in the volume. It might just be a trader thing. With investors, I guess you can give it some more leeway than that, but I typically don't like that. So I'll preface this with, I'm solely looking at these to see if they're an uptrend. If they're not, I'll eliminate them out of the portfolio going forward. And for the time frame I'm looking at, we're going to do, well, it'll either be 5 years and then the weekly candles, or it'll be 10 years and monthly candles. And then I've got it sorted currently by sector. So we're going to start just going down that way and just eliminating. We'll do an A-B kind of test, and whichever one's worse, we'll just eliminate 2 if we have too many in one given sector. So our first on the list is NXST. And once again, from the perspective of a trader, I don't really care what these stocks do. I care how they look. So once again, do your due diligence before you put anything in your own portfolio that you want to hold long term, so at least know what the company does. But for me, just looking at this, I can already see it's on an uptrend, and I'm going to trust that other people have done their due diligence, and this is something I probably would allow into my account. At least I'm not going to kick it out just yet. Alright, so next up is going to be this VZ. Alright, so here we've got Verizon, and this does not look like an uptrend. This has been going sideways for, going on 10 years nearly, and it's now just going downtrending. Like, this is something you can just immediately kick out. There's no point in holding this. So we'll just go ahead and remove it on out and go to our next thing. So TXN. It's an uptrend, it's fine. It's a little extended right now, so you should probably wait for a pullback, but this is also something you can just leave in the account. Looks fine. Once again, so our next one, SWKS. This is not an uptrend. This is some sideways mountain garbage, because it is falling apart right now. So why is it in your account? Delete that. CSCO. Once again, beautiful uptrend. It's pulling back a bit. Maybe give it some more room to pull back, and then this is something you can look to add into your portfolio. Don't know what this company is. Cincinnati Financials. Okay, it looks fine. It's an uptrend, beautiful uptrend over the past several years. It's pulling back right now. Look for an entry to get on board. Another financials. I did realize in this ETF they are a bit heavy on the financials. So this is where we can do that A/B test. And as we go through, like this one, CNA, it doesn't look as strong as the other ones that we have before it, so just get rid of it. This is some sideways garbage that's now going on a downtrend. Get rid of it. UNM looks fine. MC also looks fine. I think the other ones look stronger. Throw? Yes, throw it in the trash, because this looks awful. JHG. It's fine. I think the other ones look better, because this is now approaching some previous resistance. So I would just kill it. FIA, it looks fine. APAM, don't like it compared to the other ones. We already have enough financials. This looks terrible. Awful. All right, actually, I'm going to put a pin in it here. I'm going to go grab the wife real quick. All right, now, wife. So, what do you think of this if I were to show you this? Are you thinking long-term? Are you thinking shorting? Are you thinking...
That's so bad. That's not even good enough for short, but that's definitely not for the long run. This is dead.
This is dead?
They killing themselves like slowly.
So you don't want to keep this in your ETF?
No, absolutely. You just need to toss it.
All right. So kill that one. All right. How about this next one?
Ah, that's wonderful.
That one's good?
Yeah.
Okay. RF?
Good too.
Good.
Great. Awesome.
Right.
Ugh. Nah.
Yep. I'm with you. I agree.
But for day trading, maybe.
Day trading is fine. Yeah, day trading can be anything. You holding this long term? It's pretty much at the same price that it was.
It's been doing nothing. It's just holding there, so no.
Yeah.
Well, yeah, absolutely yes. Good too. Ugh, no. No. Ugh, no. Absolutely not.
Alright.
Oh yes.
Yeah, it looks fine. It's pulling back right now.
Yeah, but that's your entry. That's your entry point right there.
Exactly. I think the other ones look better, so this is one I would say like you don't need it.
Yeah, no, this is a little.
It's a little messy.
Absolutely. Yeah.
Compared to that last one that we killed, like no, this is night and day better.
Also, a little messy, but trying to do something.
Just trying to do something.
But it's not.
Trading-wise, sure, but investing?
No, it's not.
Yeah.
Oof, no.
No.
Absolutely not. It's okay. Fine.
We can leave it.
Yes, we leave it. I don't like it.
I don't like it either. We're going to get that out of there.
Oh, yes.
I almost killed that one. All right.
No.
No, okay, it's fine. We have enough financials in there anyway, so we can kill a few of these.
This is interesting. This is interesting.
It's so extended right now.
It's interesting, but it definitely is gonna pull a little bit because he already did. That's what it's been doing. This is an interesting path. It is 3 little solid mountains. So at some point, yes, it's going on a high trend. So I think it's about to repeat the same thing that it did before. So it's gonna go high, and then eventually it's gonna go low, and then maybe it's time for you to try this one. But it's not beautiful.
I don't like it because it's not a pure uptrend. Like you look over the past several years, it's just trading in a range. So this is one I would kill.
Yeah, it's about to build another Empire State build. This is awful.
It's mixed. It had a nasty pullback, but overall, it's still a nice uptrend. But it's just way extended right now on this bounce.
But look at that. Look at that. The high though.
Yeah.
And this is medications, right?
Yeah, we're in healthcare now.
So this is healthcare. So what is this? COVID?
Merck. Oh,
No.
the spike? No,
Yeah.
it's not COVID.
Okay, so this is solid. You still it would be good.
Do I need to ask?
Absolutely. Yes.
That's fine.
Yes.
That's fine.
No. No, absolutely not. That's not.
You don't want to hold on
That's good
for
for
dear
us.
life on the way down?
That's a short.
Just buy the dip.
Nah. No.
No, it's too messy. Hercules,
no.
know how much you love.
It's a pity, isn't it? It could be.
It has potential, like, and I put an alarm there, so if it gets above there, maybe. But
I don't
it's
think
messy.
I
It's so
don't think
messy.
it's for investment either. No. No. Oof. Oh God.
Think about the long term, though. Shouldn't we hold this for years and years?
If
and
you
years?
want a short, yes. No. Absolutely yes.
How about its competitor,
Oof.
Pepsi?
Well, they killed Diet Pepsi, so that makes sense.
Target?
I don't know what's going on. All those online shoppers. No. Oh yes, yes. Ugh, that's complicated.
Complicated. Okay.
Yes. Yes.
Compared to this one, though, A/B test. This one or this one?
This one.
DRI?
Yes.
Yeah. So let's kill this one. When? No, you're not thinking about the future? Long-term investing?
I'm tired now.
All right. Thanks for the help.
Hey guys, I hate to interrupt you, Nick. Hello there. But anywho, I'm gonna go to bed, and I'll see you guys tomorrow.
So for this back half, I'm going to speed it up in the background, and you can watch. But that's where, once you've gone through and pruned out all these bad eggs that you've got inside your basket, the ones that remain should be performing better. And that's where you can click ahead and skip to the next section, and that's where you'll see these, like, what the back testing did. Here I found this website where we can do a little portfolio backtesting, and just to show no tricks up my sleeve, I'm just going to do a 1 year, a 3 year, and then a 5 year comparison. It only allows me to put in 25 tickers, so I'm just in alphabetical order, and I'm putting them all at 4%. And then SCHD will be the comparison one, and of course it's going to be at 100%. So I've got them all in here in the ticker, and then I'm just going to run that backtest now. So this is for the 1 year case. We'll go down. Here we go, performance. And then we see that it'll mirror what SCHD has. But once again, these stocks, since we've pruned out all the stuff that looks like cat poop, it performs better. And so just in the 1 year from last year, no specific like, oh, I'm trying to time the market exactly perfectly. No, just at the beginning of the year, or I guess 1 year ago from today, is just dumping all 10,000 in. And that's where we're coming ahead with this curated profile, or curated one, at 11.5 compared to 10.8 from SCHD. All right, now we'll go and do 3 years. Run that back test. Same thing, same date. Not gonna try to do anything fancy here. Look at it. Now it's starting to pull away a good bit. And once again, like we saw on these stocks, they've been uptrending for a significant amount of time. So it's, even if we go 3 years ago, you would have still seen these uptrends. So we're talking 15,700 compared to 12,700. And it's, once again, the same stuff that's in these. And then, just for the last example, let's go to the 5-year case. Oh yeah, actually it's right here, ending value. So 21,100 compared to 15,800. Like, that's a significant change. One's, cumulative return 111% compared to a 58% over this 5-year period. Now, I understand that the dividend dogs go hard for their ETFs. However, hopefully, this cat has been able to show you that with just a simple rudimentary trader technique, you could be performing better in the same basket that you're currently in. Hopefully you can see that this is just an apples to apples comparison. I'm just eliminating all the bad apples because I don't want them dragging the other good ones down. Let me know where you agree or disagree in the comments. Thanks for watching.
What the?